So, Jeff, we're in the home stretch of the year here. We have a few weeks of trading left. But as long term investors, we're already thinking about what we're going to be doing in the year to come. Let's talk about a couple of stocks that you and I both intend to buy in 2024.
Yeah, absolutely. Looking forward to this because I'm always thinking ahead about what my next purchase is going to be. So I want to talk about mine and I want to hear yours.
Awesome. I'm Jason Hall. This is Investing Unscripted, and our video is sponsored by The Motley Fool. If you're looking for even more great stock ideas, go to our special link. Go to fool.com/unscripted. Motley Fool is going to give you its 10 best stocks to buy right now. You're going to want to check that out after watching this video. Jeff, so I'm going to have you kick it off here, and you're going to talk about a company that I actually recently bought some of this stock after you and I did a video where we were both like, our vibe was maybe it's time to sell, and that's Etsy.
Yeah, whenever I'm feeling antsy about selling a stock, I always try to go back and look at the actual business results to remind myself the reason I own it to begin with. And I think you and I both saw some potential positives that could make this turn into a winning investment from here. And I've been looking at it a little bit more, and I this is one that I have on my buy list for 2024. So if you look at the numbers, high level headlines, you could see why the stock has sold off a lot over the last couple years and 32% just this year alone. Revenue growth has slowed to about 7%. And it looks like all of the customer metrics like active buyers, active users have really plateaued. You might see a little bit of growth, but it's flattened out. And you could say to yourself, well, that means the business is slowing down. Maybe they've hit market saturation. On the positive side, the company's profitable. They generate a ton of cash, which are two good things if you're an investor. But I could see where the market would be worried that things are starting to decelerate, and maybe that's why the stock has sold off. And it is why the stock has sold off. But I would argue that maybe that's been an overreaction, and I think there could be a potential for the future. So this is just a screenshot of two charts that I have in my spreadsheet for this company. So this is active sellers and active buyers. So as I was talking about, first glance, you say to yourself, oh, wow, things have really slowed down here, especially with active buyers, right? Active sellers
And if
looks
you
like
look
it.
at the dates and I think that's really telling because you go back to March 2018 and then 2020, you saw both sellers and buyers really increased, just skyrocketed, just
Right.
absolutely skyrocketed. And then of course 2021, that's when we saw the active buyers numbers actually fell for part of the year before plateauing and then starting to very modestly increase again.
Right. So visually, this looks like the business is slowing down. And you know what? Maybe it is. If we see this trend for the next 2 or 3 years, that's not good. But if you think of it more like, what would this look like if it were just a gradual increase from March of 2018 through today? You'd have a completely different view of this. And the numbers, the actual numbers bear it out. So just using Q3 as an example. So active sellers since 2018 in Q3, since 2018, have grown at a compound annual growth rate of 34%. Active buyers, 22%. So when you smooth out all of the volatility and then plateauing, the CAGR is actually decent. Now, it has to keep doing it, right? It can't plateau forever and ever, or else we do have a problem here. So when I think about Etsy's unique role in the e-commerce space, there's really no competitor for it. If you want to go find a special handmade thing for someone in your life, you're going to go to Etsy. There are I'm sure there are competitors, but that's the main place you go. It's really not that expensive, I don't think. So when you look at the price to earnings multiple, pretty pricey. But on a price to free cash flow basis, it's only trading for 17 times free cash flow. That's not that crazy. All of the sell off in the stock has happened for probably good reasons. But I think if they're able to continue to just grow and maybe reaccelerate some of those growth metrics, there's a decent margin of safety here, I think, with the valuation that I'm thinking of adding to my position in 2024.
Yeah, there's a little more to it besides just potentially reaccelerating growth, which I do think is important. But I'm really happy with what management is doing in terms of focusing on the core business because it's not just grow, 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 buy, buy, buy. They went through a period where they made a number of acquisitions that really didn't deliver any value. And now they're starting to divest assets and they're really focusing on the core brand, which I think is really important. But they're also taking that free cash flow that the business generates and being smart about how they allocate it in other ways. And one of those, Jeff, is buying back shares. The share
Yep.
count is actually down from 125 million at the beginning of the year to about 120 million. So they're repurchasing shares, bringing the share count down with that excess cash. And I love management is being thoughtful about creating per share value. That's one of the things that helped me flip the switch from thinking about selling and moving on to actually adding to my position in late October. And it's also on my list to potentially even add more of in 2024. The thing that I'm really focusing on to see is having reset my expectations. That was a big thing. Resetting my expectations as an investor of what the business can be, thinking about it at this valuation, and can they start to show a little bit more revenue growth? When I say revenue, I'm talking about gross merchandise sales. So the sales of its sellers, right? The dollars that are transacting on its platform, its revenue has gone up almost entirely because of it's increased its take rate. So it's taking more and more from its sellers. It can only do that so much. So at some point, people need to buy more stuff on the platform. And I'm really focusing closely to see if they can generate just a modest amount of increase in that. And it's going to move even higher up my list of stocks that I'm interested in buying. You ready to move on to my choice?
Yeah, let's do it.
Okay, so I'm going to talk about ENPH. And man, this is a stock that has been absolutely smashed in 2023. So ENPH's core business is panel level electronics for the solar industry, almost entirely, and this is starting to change, but almost entirely for distributed residential solar. You put solar panels on your roof. There's an electronic device on the back of it that takes the power from the sun, converts it to AC that the grid works on, and manages that power. They're one of two companies that are the leaders in North America and increasingly in Europe for distributed solar for residential. Now, they're also starting to move into commercial. They're just in their very early stages of that with some products. They're also big in energy storage. Like I said, the stock has come down because their business is absolutely getting killed right now because it is a very cyclical business. Interest rates have skyrocketed. Less people are looking at solar right now, and their revenues are taking a beating. You'll look here, third quarter revenue, $551 million. That was down a huge amount sequentially. It was down from last year's quarter, and it's one of their weakest quarters that they've had in the past 2 years, Jeff. Here's the thing, it gets even worse when you look at their guidance. They're saying for their fourth quarter, revenue between 300 and $350 million. Again, a massive decrease from the quarter that we just saw. So you have to be asking yourself, actually asking me, "Oh, what is wrong with you? Why are you thinking about buying this business?" And the short answer, Jeff, is the stock price has come down along with the business results. And I think probably should have come down. I've done a lot of videos here on this channel with our good colleague Tyler Crow, and we've thought of Enphase and SolarEdge, its partner in that kind of duopoly, is just hard to wrap our heads around how pricey those stocks have been and how much they've continued to shoot up. The reason that I want to add to my position is because the stock has come down because of cyclical concerns. The secular tailwinds are still tremendous for renewable energy.
Right. There's no doubt that there's going to be more use of solar moving forward. So picking up shares at a lower price of a company that's, like you said, in a duopoly makes a lot of sense to me. I do have a question for you, though.
Let's hear
Uh,
it.
Price to earnings 27, price to free cash flow 20. Do you think do you think that's a good price for this business, or is part of you hoping it drops a little bit more before you buy more shares?
I think that price, that those multiples are going to skyrocket. And the reason why is because revenues and cash flows are going to continue to decline. Once we get that fourth quarter result again, and those are trailing numbers, they're about to get ugly, right? So they're misleading if you're thinking about those results over, say, the next year, right? On a forward cash flows basis, my estimates, it's probably more like 50 times where their cash flows are going to be. So I think you have to be really conscious of that. I'm going to share a slide from their most recent presentation that looks at their earnings and revenues and margins going back over multiple years. So we go back to the first quarter of the year, revenue was over $700 million a year. At this kind of a revenue run rate and at this kind of margin rate and at this level of operating income that it has historically generated, I think the stock is going to look cheap in 3 or 4 years, maybe 2 years. It may look cheap. This is one of the reasons I'm not loading up on the shares right now. I'm being meaningful and mindful about building out a position because we're still in the downturn of the cycle. Stock has come back some, right? It's not down as much as it was. It's come back some, but it's still in the weak part of the cycle. But if you look at its profitability and where it can be over multiple years, I think that this price probably will prove to be pretty cheap. There's one more thing I want to talk about, Jeff, that has me compelled by Enphase, and I wanted to share this slide, and that is cyclical businesses, especially manufacturers. One of the things that they struggle with is when the cycle turns, well, you got factories and you have employees and fixed costs that you have to cover. that can be really expensive. And that's how we see companies going from very profitable to burning money very quickly. Well, Enphase, as you can see here, they don't have a bunch of big factories. They outsource basically all of their core manufacturing. They outsource it to third-party manufacturers, and what that means is that, like Apple, they've got a more, asset-light model, and their operating costs, they can flex them down substantially more. They just back off on orders, and of course, they have contracts with fixed minimums and all that kinda stuff that protects their third-party manufacturers, but it does give them a lot more flexibility that a lot of manufacturers in cyclical industries don't have, and I think that's one of the things that makes Enphase really compelling to me. It's one of the reasons that they're so profitable as well, is because their manufacturing partners have to soak up some of the those operating costs and the capital expenses, and that means Enphase doesn't get as much revenue, but they get the most profitable part of the revenue. So put it all together, I think this is the time to buy a cyclical stock like Enphase. Just be patient. That's why I'm being patient with adding to Enphase, willing to look adding a little bit more sometime in 2024.